Oracle, which released its report after the close today, is one of the data points we're keeping a close eye on this week. The stock has increased by a substantial 27%, and in our opinion, it's rather reassuring that expenditure and AI spending are still high. And I believe that businesses are already reaping the rewards of this. For example, Google has reduced its teams and fired between 30 and 35% of managers. When considering AI, bear in mind that most of these businesses are headquartered in the United States. This leads us to the topic of valuation. Nvidia, which is currently trading at 26.6 times forward profits, is, in my opinion, the business to look at in terms of AI and its distinctiveness. Considering that Costco and Walmart actually trade at far higher multiples, 48.5 and 39 times, respectively, I don't think that's that pricey. Therefore, I continue to wonder why Nvidia's multiple is so low in comparison to staples, if it is the scarcest business in AI. The CEO of Nvidia recently discussed the differences between the tech stacks in China and the United States. In the same sentence, he even mentioned the US currency, which attracted President Trump's attention. In case you're wondering what this tech stack is, have a seat back, because we'll explain it to you today on Stocks and Translation. Let's start by listening to what Jensen himself said to Yahoo Finance following the recent earnings announcement from Nvidia. The global standard should be the American tech stack. We want the American IT stack to serve as the foundation for global technology and industries, including those in China, much like the US currency is the global standard upon which economies are based. Let's define this word now. A stack is already a metaphor in the computer industry. It is a tiered representation of how the many components of technology interact. AI can be conceptualized as a stack or hierarchy with your apps at the top and hardware at the bottom. Here's how it decomposes per layer. At the top are applications, which include chatbots, design apps, and business tools that people actually use and interact with. Platforms are the fundamental software tools needed to create and execute those applications. Next is the infrastructure, which includes large facilities that run AI and services, such as data centers and the cloud. Furthermore, it is constructed on the hardware layer, which consists of servers, chips, and the hardware that connects them. What is the difference between the Chinese and American tech stacks? Each bar represents a nation in this figure, with China at the right and the United States at the left. In the same arrangement as before, each hue represents a distinct tier of the stack. Take these figures with a grain of salt, because we had to make a lot of assumptions to arrive at them. And the yearly flow of sales or revenue for the hardware and software products is what we're trying to quantify or estimate. By the way, we're using capital expenditures rather than sales for infrastructure. As they say, it's all in the details. But when you sum it all up, it's clear that the US hardware layer, alone the bottom in white, is worth more than China's whole stack. All of this adds up to roughly $725 billion in the United States each year, whereas China spends roughly $125 billion. So why bring up the issue of the supremacy of the US dollar? Because the dollar, a widely held national currency used for cross-border trade, borrowing, and saving, is the world's reserve currency. Reserve status indicates that it is widely accepted, dependable, and portable. We may now compare the extent to which the Chinese yuan, its currency, is held in relation to the US dollar. The total value of the currencies held by all of the central banks worldwide is more than $12 trillion, and just under $7 trillion of that is represented by the US dollar, meaning that the dollar accounts for around 60% of the global pie. For China, that amounts to just less than 2%, or roughly $250 billion. Returning to Huang's first thesis, we can now contrast the dominance of the US dollar with that of the US tech stack. The ratio of these two worlds is 6-to-1, with the US tech stack being roughly 6 times larger than China's. In contrast, the dollar has around 25 times as many holdings as the Chinese yuan, or a 25-to-1 ratio. To put it another way, the dollar has a far greater influence than the American tech stack. Furthermore, it should be noted that this comparison is quite lopsided. However, the goal of this exercise is to see the global AI race from the viewpoint of the leaders who are influencing it, both on the government policy side of AI and on the industry side. It's an intriguing method to consider relative scale as well. In summary, consider the IT stack as the current struggle for global norms, similar to the dollar in banking. Although the United States currently leads, the race is undoubtedly on. This year, Oracle's stock has gained almost 90%, outperforming the S&P 500. Doug Clinton is here with us now to share more about the factors that are propelling growth at Oracle and some of the other major IT companies. He is the CEO and founder of Intelligent Alpha. Doug, top that. I believe it's rather simple, Doug. It's artificial intelligence, AI, and the prospect of increased funding for its development. Yes, exactly. I can claim that Oracle is a stock to watch, but I can't compete with the animal orchestra. They are up 90% so far this year, which is a fantastic start to the year. As we consider their earnings, I believe there is a larger issue at play, which explains why the stock was so high this week. We keep asking, when are the hyperscalers going to slow down this CapEx spend? And I believe we have an answer to that issue. Furthermore, Oracle's response is not likely anytime soon, in my opinion. Additionally, corporations like Google and Amazon are expected to have high single-digit capital expenditures CapEx of 10% next year. That seems too low to me, because there is a need for AI services. I believe that all of these hyperscalers driven by Oracle's aggressive entry into the cloud market will need to keep making investments in expanding their infrastructure. Hey, Doug. Anyone who has expressed doubt about any of these big businesses that are getting funding to expand their AI infrastructure has been burned, and burned quite badly. A recent article from the Wall Street Journal, however, raises concerns about the extent to which OpenAI's financial difficulties extend. They point out that OpenAI has planned to spend almost $60 billion annually on Oracle computing, $18 billion on its data center business, $10 billion on bespoke chips, and that's only the beginning of their commitments. However, they are currently losing billions of dollars. This year, they are expected to generate roughly $13 billion in revenue. Furthermore, the calculations don't add up. They must eventually be able to access further investment funds or the financial markets in one manner or another, and I am aware that they are headed in that direction. Although they have this memorandum of understanding with Microsoft, there are still certain issues that could arise, such as California officials saying, "No, you can't do this." Elon Musk has noted that this is not the best strategy to turn a nonprofit into a lucrative business. Are you worried about only the OpenAI aspect of this? I don't. And the most intriguing thing about this, Becky, is that when you consider what OpenAI is doing, they are truly engaging in venture capital on a scale that has never been seen before. To your point, they are committing to tens of billions of dollars that they haven't yet raised and that they don't yet have guaranteed access to. And they're essentially saying, if we build it, they will come. That's something unique, in my opinion, in this AI cycle. They are observing the customer's demand. Though only at a $13 billion run rate, I believe they are witnessing an acceleration in demand in terms of revenue. By the end of the year, they will likely be at $20 billion, and they plan to double that amount the following year. Therefore, I believe that what Sam Altman, who is from the venture capital industry, is saying is that this is the way the game is played at its best. And since I do believe that there is a client need, I believe that they will be able to resolve these issues. All of these businesses keep telling us that they are unable to meet the demand. Let's discuss where you actually stand on this as a stock picker. After an 83% year-to-date increase and a 30 to 31% increase this week alone, do you still think Oracle is a good investment? Would you still accept it? Regretfully, Oracle is not our property. Additionally, Intelligent Alpha uses AI for both stock analysis and stock selection in the megacap market. That's correct. In this instance, AI regrettably missed Oracle. As we add